Hi folks, welcome to Moneycontrol. My name is Ashwin Mohan and today on my radar is India's largest private sector mortgage financier. Yes, that's right, we're going to talk about heavyweight HDFC Limited. Now you might wonder why. Why are we specifically talking about it? Yes, you're right, your guess is right. It is connected to the mammoth fundraise because the HDFC board has recently approved fundraising of up to 14,000 crore rupees. So that's a big fundraising exercise. But that's not the reason why we are doing this update. We are doing this update because we're given to understand from our sources that HDFC Limited has in fact shortlisted as many as 19 merchant banks for this proposed 14,000 crore fundraising exercise. Yes, you heard that right, 19 merchant banks, and that is arguably a new record for India Inc. in terms of the number of advisors that any listed corporate has taken on board for any fundraising activity. So that's the reason why this number of 19 is rather special. In fact, these 19 merchant banks include both foreign banks as well as domestic banks. There are about 11 foreign banks and 8 domestic banks, and the foreign banks include all the big guns like Morgan Stanley, JP Morgan, Goldman Sachs. The domestic banks include the likes of Kotak, ICICI Securities, JM Financial, Axis Capital. So the who's who of the domestic merchant banking industry is on this deal, and there are 19 of them. Now typically whenever a corporate has a big bang or high profile or big quantum fundraising exercise, it's typical for them to take on board many banks, but 19 is of course something that is unprecedented. And the reason why many of these corporates take on board so many banks is because in some cases, depending on the mechanism of fundraising that is used and depending on the number of tranches that the corporate decides to use, it can become a complex, cumbersome logistical exercise, and that's the reason why they require a whole host of merchant banks with various specialities and with various strengths. So some of the key functions of these merchant banks are marketing the issue based on their speciality. So if it's a foreign bank, then ideally they'll market it overseas. If it's a domestic bank, they'll take care of the domestic bank of the domestic market. Then there are some who cater to HNI investors, that's their speciality. Then of course the merchant bankers also look at tapping investors for the fundraise. There's also a lot of due diligence documentation because the merchant bankers have to ensure that everything is right and accurate. And of course there's a lot of coordination and compliance as far as the regulatory interaction is concerned. So those are some of the key functions that involve the duties of a merchant bank, and that's why their role is very critical to the success of a fundraising exercise. Now you might wonder, so if HDFC Limited has appointed 19 merchant banks, which was the last issue which saw a huge clutch of banks? Well, the last issue which saw a huge clutch of banks before HDFC Limited was the mammoth RIL rights issue of 53,000 crores, and that had as many as 14 merchant banks. And of course that was not only India's biggest rights issue, it was also India's biggest ever equity fundraise. So that was one instance. Another instance was, if you recollect, the Bharti Infratel IPO of 2012. That had 13 merchant banks. And in fact, another recent example is the Mindspace REIT, the Real Estate Investment Trust IPO that is backed by Raheja Corp and Blackstone. That also has 13 merchant banks. So there have been a clutch of other corporates also who've used multiple merchant bankers, but 19 of course is a rather special figure. Now what's the main reason why HDFC Limited is going in for this fundraise? Well, many financial companies are now looking to raise what is now popularly being referred to in merchant banking circles as COVID capital. Because of COVID, there's been a lot of uncertainty. There's also been pressure on asset quality. So all of them want to bolster their capital buffers. They want to make sure that they are in a better position once, of course, later on when there'll be a scenario indeed when the moratorium that has been directed by the RBI will be lifted, and then of course there'll be a lot more pressure. So all these institutions, many of these heavyweights like HDFC want to be better prepared. The other reason of course is that HDFC also feels that COVID can lead to M&A opportunities. In fact, Chairman Deepak Parekh had also referred to it recently. So therefore, HDFC Limited is one of those heavyweights that is seeing opportunities in terms of striking deals, in terms of buying out, assets at a reasonable value. And in fact, it could be not only HDFC Limited but any of its other subsidiaries. So that's the scale as far as the possibility of deals is concerned. It could be HDFC or its subsidiaries. So clearly, it's not just bolstering the capital buffers and strengthening your balance sheet, it's also looking at M&A. So HDFC Limited is on the prowl, and of course we are given to understand from our sources that post the shareholder approval, HDFC is likely to launch this mammoth fundraising exercise in the month of August. As of now, our sources are telling us that it could be a QIP of NCD, that's non-convertible debentures and warrants. That's something that HDFC as a mechanism has used twice in the past, so they're comfortable with it, but no final decision has been taken as yet. So those are the details on the big number of advisors that HDFC Limited has taken on board. So let's wait and watch to see how things pan out in the days to come. And of course, let's not forget that there are other rivals as well in the financial space that are looking to raise big money, and those are the likes of Axis Bank and ICICI Bank. Both of them have also approved fundraising of up to 15,000 crore rupees. Let's wait and watch to see how many merchant bankers those two take on board. Stay tuned to Moneycontrol for more news and updates.